Hello traders, welcome back to the channel. Today I'm going to go over my entry strategy and how I get perfect wick entries every single time. I'm going to go through how you can do it too with some examples and some trade examples I've actually taken and sent to my VIP group. There's a link in the description for that. I send every trade I take, so the ones you'll see in this video I have actually sent to them. So let's get into it now. Before we actually start the video, if you do enjoy, like and subscribe. Hopefully we can hit 25k by the end of the year. We'll see what happens. Let's get into the video now. Let's go over to the charts and let's get to the entries. But before we do start, I just want to say technically there's no such thing as a perfect entry, because some people are entering for a move maybe that's 500 pips, some people are entering for a move that's 20 pips, so there is no real perfect entry. But the ones I'm going to show you over there are just sniper entries for my sort of trading style, and how you can get entries to maximize your profits with a smaller stop loss, which obviously as a result will make your risk to reward a lot nicer. You'll have bigger rewards. So instead of maybe a 1 to 2, you can maybe get a 1 to 4, 1 to 5. And I have some trades even, I'll show, like 1 to 12, which I did cool, and we hit the target of 1 to 12. So if you risked 1%, let's say you had a £100,000 account, you risked £1,000 on that one trade, you would have made £12,000. But say you had a 1 to 2, you would have only made £2,000. So these things I'm going to show you are basically how I managed to get these sniper entries on my trades pretty much every single time. I'll pop up some screenshots here of some of my wick entries that I do call live, and then we can just go through them now on the PC. Okay guys, so we are actually on the charts now, and I'm just going to go through how I actually managed to make a lot of profit just from simple strategies, just implementing a few different things which I'll go talk about now. So what do we see? Overall, we're in this downtrend. If we zoom out, so you can see we've got these lower highs being formed. So overall, we are looking for short positions. We could catch, shorter term buys, which we did here. We bought here and closed at 1816. But here we're looking for short positions. So we've got this overall bearish trend. So now what we're looking for is one of those big swing moves down. And that's what I'm going to show you here. So if you look at this, what have you got here? This nice imbalance. If we change the color of this, it's a nice gray. There we go. So we've got this imbalance here. And although, price doesn't have to fill this now, the way price is moving, we've got these moves down, price comes back up, and then it drops. So what we're looking for is price to come back up to this level. What do we also have? We have an order block here. So if we change the color of this to a blue, so blue for order blocks, and then we have gray for imbalance. So we also have an imbalance here, which as you see has pretty much been filled. If we play it along, what you can see is there that this imbalance is now filled, so we can remove this, and now we move on to the next. So what we want to actually see at this level is price maybe coming up 50%, dropping, coming up to the imbalance, dropping, coming up to the order block, and then dropping. We've got 3 different scenarios which we could see, or even the 4th scenario, we could see price just rally straight on. So if we play it along a bit more, what we can see is price comes up to this level. We got this nice bullish push, and when we come up here, what do we have? A wick into the level. So this is now where we're looking for possible entries. So we've had a wick, 50% of the order block has been filled now, and also this imbalance here has been filled. So now around this area, this is where we can extend this area out and now go down to the lower time frames. So if we look on the 15-minute here, what do we see? So we have this area around here. So we have this area here of demand, which is obviously now turned into a supply zone. So now what we're looking for is, price to come up to this level and then drop. I found that the first tap of this level is usually the most powerful. So say price does this, it comes up to the level, drops down, comes back up, then creates a nice double top formation. What you can usually see here is there's money above this level. So you have money above here, because what's happening is the people that are entering sell positions here, their stops are just above. And what you can see, if price actually makes this formation here, you have the double top. And what people are doing on the double top as well, people are selling here again. So a lot of retail traders, you know, they'll see this double top and they'll sell. A lot of the times price wicks up above, stops them out, and then what happens? Price will maybe come down a bit, people start buying here with their stops below, and then what will happen with price? Rally straight back down in a direction, and then people will blame it on, you know, a stop hunt, where it's just, there's a lot of orders above this level, so we're looking for price to, you know, mitigate these levels, and that's why I don't usually trade double tops how retail traders would trade them. So I usually look for the first tap of this level into this institutional order block, and then we look for our entries. And as you see here, what do we have? We had this nice bearish engulfing. However, you could have entered on the close of this here. If we actually go down on the lower time frames again, onto the 5 minute here, or even, I think I entered this on the 10 minute. So what do we have? This bearish engulfing here, and this tweezer top sort of formation on gold, which I found is quite powerful. But if we go back to the 15 minute now, you can see you could have either entered on this candle close here on the 15 minute, or even down here like that. But we entered up here, and we had our stops just above the level. I think it was around there. So, you know, when you're trading gold like this, 50 pip stop isn't actually that much compared to the reward we're looking for. But say we were on like the 1 minute at this area, we probably could have got, you know, 5-10 pip stop even, which I'll go into later on a different pair. But this is gold. I usually use slightly bigger stops, and where we're targeting for our first target, that's right, the previous lows. So usually what I do is have a first target, which is usually either a 1-to-1 or a 1-to-2. So on this one, that would be maybe, you know, small move there, and that's a 1-to-1. 1-to-2, small move here. We're targeting the big moves here, so we've got 1-to-8 which we're targeting. As you see, we entered on this wick up here, and I can actually put a screenshot up here of me actually getting this entry to prove that I did actually enter this trade. But yeah, if we play it on now, you can see the price goes straight into profit. You know, entries would have been covered pretty much instantly. And then where did the price come to? There, take profit hit. A lot of people like to trail their stops. So instead of maybe leaving your stop loss at break even at this level, and then maybe if price comes back up, you get stopped out at break even, you could trail it. So as price is moving into profit, you can start trailing your stop. And if we actually play price on even further, we can see what happens. So price pretty sure comes back to test this level here. So what can we see here? We have a nice area. So what do we look for price to come back to? This sort of level as a pullback. Because what have we done now? We've created the lower high, we've created the lower low. So what do we need now? Another lower low. So we've gone dun, dun, dun. And what do we need now? Another lower high. And then drop. So that's what we're looking for here. And then what happened? Price wicked into that level. What do we have? The first tap. And that's where I would have got my entry. And then price fell down. As you see. So let's just look at this. If you've got another entry here, and with your stops, what would you have done? You could have had them just above this level, just above this key level here, because you know that if you get this second tap of this level, we could see price get manipulated above the level, and then we could get stopped out. But if we've got this nice level here, so what have we got on this trade? We've got a 1-to-8. And let's say we closed right at the bottom, just for an example. You were trading your stop at this low, let's say, and you were trailing this one as well at this low. when price was going down here, and you got stopped out at this trailing stop here. So what would you have made profit wise? So from this trade here, you would have been trailing your stop as you go along. This trade here, you would have got a re-entry on the retest for the continuation of this trend. Profit wise, this trade 9.72. This trade here 13.31. You know, this is 23% from 2 trades on gold. And what was the time frame on this? 1st of March till the 3rd of March. So 2 days you've made 22% from one big move, just by using simple supply demand zones, the first tap of these zones. And as you see here, we've got this order block, we've got the imbalance fill. Using these wick entries, we get the wick into the level, we sell. Obviously you can't just use one wick as a confluence, because that wouldn't really be the best in my opinion. But if we actually look on a different pair now at this sort of strategy, if we go on Euro JPY, you can see, you know, price on EJ moves quite a bit. We get a lot of consolidation, then we get these big moves. So if we look at how we could have caught these big moves, we go on the 4 hour. In this level, what do we have forming? Same as the other example, we have this high and we have this big impulsive move down to the downside. So all these imbalances which are being created here, so you have this imbalance here, you have this imbalance here, this imbalance here, imbalance here, imbalance here. These are all being created, and a lot of these have been filled now, and now we're looking for price to come up to these ones. As you see, imbalance fill. But now what we're looking for is, you see this order block here being formed. This is where we can actually look for entries. So we've got tap into that level. However, we do have price breaking out this level now, so this is why you need to wait for more than one confirmation before actually entering one of these trades. So now what we're looking for, the same sort of thing. So now, instead of creating these higher lows, higher highs, we've now shifted momentum. So now we're looking for short positions. If we can hold in this sort of trend, created this double bottom here. So now we're looking for price to come back to this level. So price to come back to this level to mitigate these orders below this level. Because as we've said about earlier, there's money below this level. So now we're looking for price and the banks to take this liquidity, and there we go. So what we have here now, perfect example. This level also acting as a support and resistance level, or supply and demand, however you see it. And then price came down, dropped. Now what do we look for? So we've got that break of that level. You could say, you know, this level here is another level. You know, you've got a wick in, you've got wicks into the level, break, retest to this level. So now we've taken all the money that's below this level. So we've got the money below here. That's now been taken, so that's crossed off. So now we're looking for the same thing to happen again. So now we've got the supply and demand zone here. So what do we look for? You see we've got wicks of this level. Boom, perfect. Wick up here. Lower time frames, got the wick entry. I don't think I'll be able to go onto the lower time frames because I'm on the replay tool. I don't think it will let me. But what you'll see happen here is maybe, as we've seen in the previous examples, price comes in, it wicks, and then we get an engulfing. And what would you do here with your stop loss? Just above the wick. Perfection. But the thing is though, where would you target? So we got that small stop, but where are we targeting? And personally, I'd like to target one of the order blocks that we've seen previously. So if we look here, where can we target? You know, we could target this level down here. This level here. So what have we got? We've got this big move up, big move down, but the final candle here in this area, we've got that area there. We've got the bearish candle before the big move up. So that's where we're targeting. So if we move price on, what happens? So price moves down, down, down. We get a gap. We have another tap at this level. boom. This is where we're actually looking. So we've got that level there which we targeted. Take profit is hit on that level. Well, technically it's hit. Yeah, there we go. This order block here, acting as a reversal zone for this sort of strategy that I use. But now what do we look for now at this level? We look to buy price back up. So we've got this touch here, this one touch at this order block, which I said is, you know, a perfect zone for entries. And then what do we have? We have our stops just below this level. If we move that down there, you know, tight stops, 14 pip stops, we can get them tighter. If we entered down here, you know, 11.6 pip stops, where are we targeting? First target could be here, and you're probably asking why? Because the same reason why we had these double tops here and we were looking for price to go down, we've got price creating wick up. So we've got this double top here. So this could be our first target on this trade. But also, second target, these highs here, because we've got this bullish candle before the big move down. So this is a nice order block area here. So if we look now, boom, there we go, straight into profit. First target here, absolutely demolished. See if the second target gets hit. Playing it along. Boom, second target hit. So from these two trades, entering on the wicks, stop loss, you know, you could have been a bit safer had your stop loss below this level, but we put it below these levels here. And for this trade, a nice 1 to 15. This trade, a nice 1 to 12. So the gold trades, we managed 23% from two trades. And this, we managed 27%. Perfection. I did actually post this on my Instagram story before it happened. All my stories for free for you to enter. Don't know if anyone did, but if you did, free 27% profit. But yeah, this is all I'm actually going to go over in this video. Hope you did learn something. This is it in more detail in my course, with some obviously secret strategies which I use. So I didn't go over everything in this video because it's a free YouTube video. If you want any more info, my course is down below, and so is my VIP group. If you did enjoy, like, subscribe, and I'll see you in the next one.